And that's where we kick off our conversations this morning. And joining us now to review the CBN MPC decision is a former Deputy Governor of the Central Bank, Dr. Obadiah Milafia. Good morning, Dr. Milafia. Thanks for joining us on the program. Well, tell us, what are your views on the decision of the Central Bank MPC to hold rates yesterday? Was that decision expected?
In a manner of speaking, I would say yes. It was expected, because you would recall that only in their May meeting, after a long time of keeping the rates, that they had decided to reduce the MPR, monetary policy rate, by 100 basis points to 12.5%. And all other metrics were kept steady. They wanted to signal that they were very much aware of the huge impacts of the lockdown and the general slowdown in the global economy. Central bankers by nature are very cautious people. They try not to be emotional, and they try not to be stampeded. So in a way, it was to be expected. But if I were a member, and I used to be a member before, but if I were a member of the Monetary Policy Committee, I would have been among the two that voted to further reduce the MPR.
And why is that?
I think that it's slightly way too high. And we need to grow this economy. And the massive slowdown has been very huge. I know that inflation has inched upwards, but at this time, it is largely a factor of seasonality. This is the planting season. And as you know, the food sector accounts for almost 60% of headline inflation in this country. So it is a factor of seasonality more than anything else. So I would have further reduced the MPR by 100 basis points to signal that we want to grow this economy, we want to boost credit, and this is what we would expect the commercial banks to do to support the government policy and the stimulus package in order to reboot growth and to get the great Nigerian people back to work again. Now, one little thing that is not much known, it's not a little thing, that the CBN keeps in its coffers something like 10 trillion naira of commercial bank money. Because they've kept the CRR and the liquidity ratios rather high. And we find ourselves in the absurd situation of actually commercial banks turning away depositors. Because once they take more deposits, they're likely to bypass the limit for both the liquidity ratio and the cash reserve ratio. And that is, to me, a very worrying situation, because ordinarily, the banks should be in the business of competing for depositors' funds, because that is where they get the money to on-lend to customers. So in a situation where we find ourselves, we find commercial banks turning away depositors, to me, is a very worrying situation. It's not good for the banking system. It's not good for the economy. Cash just sitting there doing nothing is a gargantuan waste. So we really need to do better. And the second point I'd like to make, really, is that this is a window of opportunity. A lot of our monetary policy has all been calibrated to encourage inward capital flows, not in terms of foreign direct investments, but in terms of money going into the capital markets. God help you if you pitch an entire monetary policy strategy on just trying to encourage external actors to bring in money. It should be far more than that. Our fundamental commitment should be to growing the Nigerian economy, to expanding opportunities, to creating jobs, and to building stability of all the fundamentals of the economy, interest rates, exchange rate, and the rest of it. I think that should be the priority. It requires going back to the drawing board and ask ourselves the fundamental questions of what monetary policy strategy should all be about, whether we have a development strategy and how we can link that development strategy to supporting to monetary policy and getting the two to work together to build a world-class technological industrial economy fit for use in the 21st century.
All right, Dr. Milafia, now let's take a step further into the debt markets now. Of course, open market operations, maturities, and yields on treasury bills are trading well below the MPR. Is there any domestic events that can actually improve yields?
Well, confidence is extremely important. As you know, the people in the capital markets and the stock markets behave, with all respect, a little bit like sheep sometimes. There's what is known as the herd instinct, and there's a whole field of finance known as behavioral finance that study the impact of psychology. In this time of lockdown, in this time of a global pandemic, there are panics, there are fears, and so people tend to overreact. My take on this is that a lot depends on policy credibility. When rational actors look around and see that the people making decisions are credible, that they know what they're doing, and they have conviction, and would stand by the policies they are pushing through, and that those policies are in the best interest of the common good of all the people, not the interest of people who have captured the state, not in the interest of vested interest in the commercial banks, not in the vested interest of industrial money bags, but in the interests of ordinary Nigerians, of all the people. And if they know that, and there is credibility, that overreaction will be limited. So we need to work on ourselves on building confidence in having credibility in the policy stances that we take and sending the right signals that we are doing all these policies in the interest of all Nigerians, and that there is a development strategy out there that the monetary policy apparatus and tools are supporting to push forward, to build a sophisticated, diversified industrial technological economy that creates jobs, that expands opportunities, and builds for our happiness and collective welfare.
All right, Dr. Milafia, now let's talk about the exchange rate unification drive of the CBN, of course, which appears to be an ongoing process, even though we didn't hear much about that at the meeting yesterday. Why do you think the CBN actually appeared mute on this yesterday at the meeting?
Well, I wouldn't know, and I'm not in the habit of second-guessing my colleagues who often have to work under difficult conditions and pressure. But I've always been very worried about this, and I think they know my views on this, that keeping multiple rates of exchange is not only bad, it's actually iniquitous. It opens the room for all kinds of rent-seeking behavior. And it is pernicious, it leads to corruption, and it is not good. So you know me, I know you, I give you a different exchange rate. The other person, we don't know them, they don't know us, so we give them at the full rate. That is very bad. We need a unified exchange rate. It sends the clearest signals of transparency, that there is no favoritism, there are no backdoor deals, that sort of thing. So really, this is my view. And I would imagine that they wouldn't want to talk too much on that, because we live in a highly integrated global marketplace. And central bankers, particularly a central bank governor, must choose his words very carefully. In fact, during the times of Alan Greenspan, when he was the chairman of the Federal Reserve of the United States, which is the American Central Bank, he would make sure that his words were very spare. And to the extent that people used to look at the color of his tie and the color of his suit and the color of the bag he was carrying to decide which way the wind was blowing. So we're taking it to extremes. That was taking it to extremes. But it just underlines the point that central bank governors must choose their words very carefully. And those who know the trade will learn to read not only what is being said, but also what is not being said. And I can tell you what is not being said. What is not being said is that, there's a heavy pressure on the exchange rate, and it has been marginally devalued by at least 20%. If you look at what the ongoing rate in the market now. Now, they don't want to rock the boat, so, they don't need to talk about it. But there are pressures, and they shouldn't talk themselves into a devaluation. That would not be right. So I support them in not talking about it. But the pressures are there, and a lot depends on what happens in the next quarter. If there is a resurgence of the pandemic, and if, God forbid, all the actions being taken aren't producing the right results, we might find ourselves in another lockdown. And if there is another lockdown and global oil prices further go down south, we may find ourselves in a position where there is more pressure on the exchange rate. And, I'm not a believer in devaluation myself, but I'm a believer in market-determined principles for the exchange rate. There is only so much you can do to intervene in the forex market, because you are dipping into the external reserves to do this. And up to some limit, you wouldn't be able to do it, because if you did that further, it will automatically put a dent on the exchange rate, because rational actors and speculators, we know that they can call you a bluff, knowing that there's only so much money you can use to defend the Naira. But I am for a stable exchange rate regime, and in the understanding that there is no free market, totally 100% free market exchange rate anywhere in the world. That is a fact. People defend the stability of the exchange rate because it is good for the economy, because it stabilizes, financial fundamentals, and it reduces, speculation, and is good for long-term stability and long-term prosperity. But we have to understand there are a lot of issues that go beyond just finance and economics. They have to do with geopolitics. We have to build a stable and prosperous democracy. We have to ensure law and order and security. In a situation of rising banditry, especially in the Middle Belt, which is the breadbasket of the nation, and in the far north now, all these things, investors and everybody, they're watching. And nobody would want to invest in a jungle.
Okay.
of a lawless and disorderly country. So we must fix those issues because they have an impact on the value of your currency, even
All
on
right.
the image of your country.
All right.
So
We would actually have to wrap up this conversation at this point. Would like to thank you, former Deputy Governor of the Central Bank, Dr. Obadiah Milafia, for speaking with us this morning on the program.
Thank you.
Our domestic commodities update will be up next when we return in just a moment. Please stay with us.